it's now become clear from the forward-looking data, the Philly Fed and everything else is just showing it. But if you start to look at the really forward data, like the new orders component of all the regional Fed surveys, they're pricing things like ISM at 35. These are shocking declines, which I've been trying to tell people about. Is economic growth over the next 3 months is going to shock people to the downside, and it's going to change everybody's narrative from, okay, we're in this sticky inflation environment, the supply constraints, to, oh my God, we've broken the economy.
The S&P Global U.S. Manufacturing Purchasing Managers Index dropped lower to 52.3 in July from 52.7 in June, preliminary estimates showed. That is the slowest growth in manufacturing activity since 2020. There has also been a further fall in new order inflows and broadly unchanged production levels. In addition, more firms are planning several cost-cutting measures, including reducing staffing numbers, despite the second weakest rate of job creation in the current 2-year sequence of employment growth. The Purchasing Managers Index prevails the direction of economic trends in the manufacturing and services sectors. It is an important indicator that can help us better understand economic trends and predict what the markets are going to look like 3, 6, or 8 months down the line. In a recent Real Vision broadcast, Raoul Pal discusses his outlook on this important indicator and how it affects bonds, equities, commodities, and the cryptocurrency market. The United States Treasury yields dropped further on Friday due to weak economic data and a significant interest rate hike from the European Central Bank. The 10-year bond yield dropped sharply to 2.792%, the lowest in over 2 weeks. It is also the worst single-day decline since March 2020. In his interview, Powell discusses the sharp decline in bond yields and other asset classes and what he thinks the next few months will look like for investors. Please watch, like, and share this video. You could also drop your comments and observations in the comment section below and subscribe to the channel. Enjoy the video.
Expecting ISM to either hit 50 or even go through it, which would kind of surprise people. But I think it goes below 40 in the next 2 to 3 months, which is not what people are expecting. And that changes how the markets are positioned. So the markets are very positioned, still short bonds and underweight bonds. People are massively underweight equities now, and they were and still are underweight crypto. And that's not the general public, but that is people like crypto hedge funds, massively underweight. Some of them have so much cash, and people are still overweight commodities. So, and the dollar's been the other key variable. I mean, there's a lot going on. This is a pure macro environment. I mean, it's all about macro right now. So the dollar's been screaming higher. It's kind of stabilized a bit for now. It's not yet clear to me if the dollar moves another leg higher now, or we correct a bit longer and then move higher. Don't know. I imagine if growth implodes, the dollar moves. The dollar is already pricing ISM around 45, so it's already pricing a full recession, but I think it's going to be bigger than that. So I think the rate of change in the dollar goes further. So that's still a wrecking ball, still to keep playing out over time. I think there's still washouts to come from the energy sector and others. Doesn't mean we go all the way back to the pre-COVID levels where many of the markets have got to, but we're going to retrace a lot more of that. My base case is that oil comes down somewhere between $80 and $60, to $80 and $60. The equity markets are somewhat more complicated because they're already pricing in. The S&P is pricing in ISM around 45, so there's a bit more room. The NASDAQ is around about 40. So it's pretty much priced in what I think is coming. My forward-looking indicators, which I'll show in a minute, will suggest that the bottom of the economic trough is like March next year. But I think stocks bottom first. So in 2018, they bottomed a year before the economy. In 1974, these are the parallels I've been using. It bottomed 3 months before. So it's somewhere between that. So I think they bottom in the next few months, or they have bottomed, which is contrary to what most people think. If they price in the ISM properly, there should be another leg lower, and that should be the final leg for me.
According to Raoul Pal, the economic decline is going to continue until March 2023. That's 7 more months of uncertainties for investors, especially those interested in traditional assets. With 7 more months to go, it is necessary that we expect further declines in the markets and the economy as a whole. Unfortunately, that will mean more job losses for U.S. residents already weighed down by skyrocketing prices of goods. In his interview, the Real Vision CEO and former Goldman Sachs executive also gives a much-needed update on the cryptocurrency market, which has seen further decline in the past 24 hours. Bitcoin has lost over 3% in 24 hours and is now trading at $21,900, its lowest price in almost a week. Top altcoins like Ethereum, Solana, Cardano, XRP, Dogecoin, and Polygon have all dropped between 5 and 8% in the last 24 hours. Here is Raoul Pal update for the cryptocurrency market.
Corroborating evidence is that crypto started going up, and many of these tokens have risen 100% in a week and a half or 2 weeks. Now, they broke these patterns where everybody was expecting another leg lower, much like they are in equities, which makes me slightly suspicious of equities, which I don't like being short. But crypto did really well. It's now overbought. We're putting in like DMARC 9 patterns, which tend to be a short-term correction. Now, do we go back to retest the lows based on the growth numbers and other stuff? I don't think so. I think we're more sideways consolidation than another rip higher, but it's not clear to me. But I think the base is in, and I've been saying that for a while now, because crypto is a very forward-looking asset, and it will look further ahead than anybody else, and it's sniffing out the change in bond yields. So that brings me on to the most important part, which is bond yields. Bond yields are now rolling over. As I've been forecasting, they're about to break a head and shoulders top pattern. So, Brian, if you can show the head and shoulders top pattern, which is this chart here, 275 in 10-year bond yields. If it breaks that, then we should start to go down below 2%. I think somewhere around 175. So that's not what the market expects. But if you think of what that does to growthy assets, it's taking down the future discount rate. And if that means that inflation is coming lower, then you're taking some of the inflation expectations out. So things like what I refer to as the exponential age stocks, the further out the growth curve, things like Scottish Mutual Trust in the UK, which I've just interviewed on Real Vision. They're amazing, some of the best tech investors in the world. They're going to be coming on. But also, you know, whether it's the semiconductors, whether it's ARC, whether it's robotics, and all of this that I've got a whole basket of.
As the markets await an interest rate hike announcement from the Federal Reserve and earnings reports from Alphabet, Apple, Microsoft, Amazon, and other major tech firms, investors seem to be moving away from riskier assets. With the recent decline in the crypto market, the overall crypto market has dropped to almost $1 trillion. Though many experts believe the central bank will go with a 75 basis point hike, recent reports suggest the apex bank could go as high as 100 basis points. If that happens, it would be the largest increase since the Fed started directly using overnight interest rates to conduct monetary policy in the early 90s. What do you think will be the outcome of the Federal Reserve two-day meeting? And how do you think a 75 or 100 basis points interest rate hike will affect the markets? Please share your thoughts as well as your observations on Raoul Pal's interview in the comment section below. Also, remember to like this video, subscribe, and turn on post notifications for more videos like this. Thanks for watching.